Hello. So today I'm going to talk about the very basic strategy in binary options. Excuse me. It's called price action, and today I'm just going to give you an overview, a little bit of theory behind it, what are support resistance lines, what they mean, why they work, different time frames, and then go over to example. And price action is it's one of the fundamental aspects of almost every um, technical idea there is, and it's very important to understand, definitely in Forex. And I'll just get right to it. Um, Basically, what is price action? It's the idea that price will react to values that's reacted at previously, and it's good to think of these areas as zones, not so much as lines. Even though we'll draw them as lines, I'm thinking about it as more as zones, where people have previously entered buys, exited sells, or if it'd be called supports, and those areas are likely price will rebound, or areas where people previously exited buys or entered sells, and we'll call those areas resistance. And price can do three things when it runs into support resistance, and it seems pretty obvious, but it does have implications to it. And it can either like bounce off it and reverse the other direction. It can break out past it, or it can just ignore it completely. And first, very quickly, just showing you a chart of example of it. Um, Support lines are drawn in green, when the resistance are in red, and the areas you notice here, this price went up, bounced back down twice to almost this area, and twice to the red line. When it went past it again over here, it's about 14, 15, 17 days later. Um, it hit off the resistance line and really went back down, and then it broke out past the green line that it's previously been using. I'll use an example more in just a second. Um, we draw the lines, really based on what we see, what strikes out the most. Use these lines again. As I said, areas. My most important point: areas of interest. Not definitely not. You can say definitely not guaranteed. And the price wouldn't go anywhere if it was guaranteed to reverse every time it hit something. Um, they don't have to be horizontal as well. You can draw. You didn't even draw a vertical line, wouldn't be helpful at all. But you can draw, 30 degrees lines. Like I could have drawn, if I was doing this real time, I could have drawn a line from here to here about, and thinking, well, maybe this price is gonna start reaching higher levels. But I didn't draw at the time. But it could be completely about equal um, about equal idea of what price might be happening. But I was aware at the time. It seemed like the Euro USD was in a longer term downtrend, so I was thinking, well, maybe it's gonna start and it seemed to be ranging at least for this whole month almost, which seems like when it's starting to range, horizontal lines are better. When it's trending, obviously, not horizontal lines, 20 degrees, 30 degrees, whatever fits the peaks of the highs, and using those the same ways we use the horizontal lines essentially. And you can also use confirmation before it goes to before you enter the trade of a breakout or holding support resistance. And out of all of them, I mean, you can spend days and years studying candle formation. Probably not years, probably a month you could do easily to different candle formations and what different price waves and stuff is happening. But I find the most important out of all of them is the engulfing candles, and that's where there's a really big example right here, and obviously this one's a pretty good one. Basically, the whole next candle is the opposite color, and takes out the whole body. You want to take out the wick, much of the wick as you can, because that gives you a stronger signal. Excuse me. Like here, we have pretty good. It doesn't quite cover the bottom, but it covers all the base easily, and then a lot of the wick on both sides. And this one just does a really good signs that price is likely to reverse. And if you have support and resistance levels on top of that, like we do here, it gives you a really really good signal, stronger than it would be if it just had a line or just had the engulfing candle. And another formation I like. Basically, this is the only two I would memorize. You can use these are also signals like the dojis or the hammers and stuff like that. But I only like hammers when it goes along with basically an engulfing. And this is like a two candle engulfing. This one. This is also a shooting star here. I mean three star pattern. We have the hammer, and then you also have a nether candle, the same color, that's crushing out this candle. It doesn't have to beat the whole thing usually. Usually just a little bit, like more like 2/3. Gives you a really good signal. Like right here we have another one too. I find that a very effective signal as well. Besides those two, here's another example. It doesn't have to be a hammer. Just any important candle, meaning like a really small body and longer wicks, like this one. Here we had this candle going down, and then here going up about 2/3 of the way, and then boom, price moved up. So when to enter, when it holds through support resistance lines or along line or channel, and shows confirmation is also very important to look for. And where you could enter on a breakout support resistance lines. And I like to play it a little more safe. Entering the breakouts where not only it breaks out, but then it retests the previous support resistance. Like here, broke out. Instead of going like, oh, it's enter this way, playing a little safer, saving, what is this? From like 1.257 to 1.262, about 500 pips on that one, and then entering again down, once it retests, like enter on the green line. And that's basically it for this video. I'm gonna make a candlestick video as well pretty soon. This is just the very basic price actions. I'll probably make a more advanced price action video first. Just give you a little hint at it. Another price action. I mean, I feel like I only go first explain it this way. There is, almost, I don't know, probably 50 to hundreds of different patterns and candlesticks that can mean certain things. But there's a few that always really stick out to me, and a lot of times, very often mean the support resistance. And one of these is the breakout retest I just talked about. I think that's very important. Even just using that strategy, you'll probably find a trade or two a week, even if you're using like 4 hour or 1 hour. You'll probably find a trade or two a week if you're following, 5 or so pairs. And it's a very high success rate, especially resistances and supports that have previously very well have been held. Like we had this held here, and then far later. This is the support line that's been going on. And that's for over 20 days, and then when it broke it, it breaks it too fast. And this one really wasn't that significant a break, but anyway, it did still retest it, and then it went down even lower. And that can save you your risk, because then you can, if it's gonna go even 1 or 2 candles probably past this, it's a good idea to exit the trade. If you have like either a couple more of white candles that are pushing price higher, because your whole point of your trade was that it was breaking out. So if it doesn't continue, then it was either a false breakout or it's just price just messing with you, I guess. Anyway, that's it for this video. Have a good time trading, guys. I'll see you guys later.